Hey, how's it going? It's Scott with another Shadow Short for you on ES Futures. I want to go over the continuous two-way auction process, which is how I view the market. The two-way auction process is a constant negotiation between buyers and sellers, reflecting the market's attempt to find fair value. Let's take a look at how this process played out in the ES Future broader market. So the first part is we made all-time highs on the 16th of July. So between July 2nd and July 16th, we saw just consecutive days of higher highs being made, culminating in an all-time high of 57.21 and a quarter. The lack of a taper at the top doesn't necessarily suggest buyer exhaustion, but rather indicates that the auction remained incomplete. Buyers were still engaged, potentially at poor locations. The lack of a taper could mean that participants were overextended, and as a result, when the market opened up the next day with a gap down, which it did, it caught many of those buyers off guard. The gap down on July 17th signaled that sellers were quick to step in and take advantage of the participants who were long in poor location. Part 2, the downward auction. As the auction moved lower, the market reached a pullback low of 51.46 on August 5th, 2024. So we advertised lower. The continuous two-way auction process went to the downside, and at 51.46, even though there wasn't much of a taper and the auction remained unfinished, prices could not explore lower. So the market found balance, buyers stepped back in, and began the continuous two-way auction to the upside. So now we have the failed push higher. So following the August 5th low, buyers started to push prices higher again, reaching 56.69 on August 26. But here's where the auction logic comes in. Despite this rally, the market failed to reach the all-time high. The multiple failed attempts to move the market higher reflect buyer hesitation and the possibility that the market was no longer willing to accept those higher prices as fair value. And when the auction stalls like this, it often leads to sellers regaining control, as we saw when prices began advertising lower again, eventually closing Friday at 54.10 and a quarter. The continuous two-way auction reflects the market's search for balance between buyers and sellers. When prices fail to return to the all-time high, it's a signal that market participants may no longer see those levels as fair. The failure to reach higher prices creates a potential for the next sequence to be a lower low or a higher low, depending on how market participants perceive value in the coming days. While I don't know exactly what's going to happen next, I do know that the continuous two-way auction process, combined with the insights from market internals, will guide my moves. It's all about reading what the market is telling us in real time. And if this resonated with you, I just want to bring to your attention that Jim Dalton, the OG of teaching the auction process and market profile, is having his final intensive this fall from October 16th to November 15th. And if you're interested, please check out jimdaltontrading.com. Hope to see you in the room and have a wonderful rest of your weekend. Hey, this is Scott Schneider from the Futures Room over at ShadowTrader's Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons. And if you'd like to trade live with me in real time, please click the link in the description below. Have a great day and happy trading.